Hey guys, welcome to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. Guys, if you haven't yet already, consider subscribing to my channel. Give me a thumbs up. It really helps out the channel. Leave me some comments in the description below. That really helps out the channel. You want some free stocks, free money, check out the links in the description below. It helps me out. And you could get some free stocks and sign up for Cash App or something. You'll get $5. I'll get $5, and it really helps out the channel, supports the channel. So I really appreciate that. Thank you guys so much. We have a video today about warrants again because I had some questions on my previous warrant video. So I decided instead of trying to type out my answers, I'll just do another video. And so please, if you guys are watching this video, give it a thumbs up. It really helps out because these videos typically don't get a lot of views because it's not about a particular stock. It's more about like an educational thing about warrants. So these don't get a lot of views. So if you would please give me a thumbs up and leave a comment in the description below, it would really help out. So let's get started. So I have a comment from Zach Caslow. So he is commenting, I'm guessing he's saying you bought, so I'm guessing like he's saying in an example, if I had bought 700 warrants at $25 of Hyliion, what would you do if they called them? Average down, sell for a loss, or exercise and be down a ton to start? So basically, I don't know if he's in this situation or he's just hypothetically speaking, whatever the situation may be, somebody has bought 700 warrants of Hyliion at $25 a warrant, which is probably at all-time highs. Right now, Hyliion warrants are $12.84. So if somebody bought them for $25, it was probably at the all-time high, and probably the worst position you could be right now is paying all-time highs, and the warrants are down more than 50%. So I'm going to go through what I would do in this situation. So not financial advice, just an educational purpose only. Everyone's situation is different. But if I was in this position, number one, I would not sell for a loss. So that was one of his options. I'm not going to sell for 50% loss, especially when the company is strong, the company is in good position. They're not going bankrupt or anything. So I would not sell for a loss because I know for sure if I hold on to this long enough, I will make my money back and extra. So definitely not going to sell for a loss. Remember, you're not losing anything until you sell. So if you're going to sell, that is when you lock in your losses. So that is out of the question for me. It would not sell for a loss. The other option he has is to average down. That is a good option, depending on how much money you have on the side. You have to keep in mind if they call these warrants, you're going to have some money to exercise them. It's going to be $11.50 per warrant in order to exercise them, unless they do a cashless option. And that brings me to my next comment. T-Guns was talking about cashless redemption clause for IPOB, but Hyliion also has this cashless redemption clause, so just cashless in general. So we're going to talk about that also. So a cashless redemption is basically instead of forking out $11.50 per warrant out of your pocket additional cash in order to expedite, they could do a cashless option, and in that case, basically they will expedite your warrants. So they'll take back your warrants and give you stock, but instead of a one-to-one, because that's what it would be if you exercise. If you had one warrant, you pay $11.50. They'll give you one, exchange it for one common share, one stock of Hyliion. But if they do a cashless option, the details are not out on that yet. But if they do, they will have details out. It could be anything. We don't know. It could be like one warrant. If you do cashless, could be a quarter of a stock or a third of a stock or half a stock. So it could be whatever, but it will be a fraction of a stock. That way you don't have to put out extra money, but you're going to get less stock. You're not going to get that one for one. So that is an option. And if they do that, you don't have to fork out another $11.50 per warrant. So that is an option. So that answers T-Guns. Thank you for the question. Thank you for the comment. That answers that. Basically, that's what it is, a cashless option. You'll be able to get the stock, but you're going to be getting a fraction of a stock instead of the whole stock if there's a cashless option. What the fraction is, nobody knows yet, because that will be set forth whenever they decide if they're going to do a cashless option. Then his other option was to average down. So that's a good that is a good choice, because the warrants right now, just talking about the warrants, is down 50% from where our situation is. $25 was the price for the warrants, and right now we're at $12.84. So more than 50% discount right now. So if I had some extra money, I might buy more warrants at $12.84. And that would bring down my cost basis. Instead of $25, depending on how much I bought, it could bring it down to $23, $20. Just all depends on how much more you buy. So that is a good option as well. It just depends on if I had money on the side in order to buy more warrants. So that is a good option. And then the third option is to exercise the warrants. So 30 days after the merger. So the merger happened, I think it was like sometime last week or a week and a half ago. So 30 days after that date, whatever it is, I forgot what the date was. After that, you are able to exercise. So you could opt to exercise. But that doesn't make any sense in this situation, because if you exercise, you're gonna be at a loss because you have to pay $11.50 plus the $25 that you already paid. So you're in it for more than $30 when the stock right now is only, I think, like $21. So it doesn't make sense for you. Sorry, the stock right now is $29. So it doesn't make sense for you to exercise it, because you're going to be exercising for a loss, right? You're going to be essentially paying, I think it's like $36. You're going to be essentially paying $36.50 for the stock that is currently only trading for $29. So that doesn't make sense for you to exercise. So unless they force you to exercise, so now we're in the situation that he's talking about, is what would you do if they called them? So that means that the company is forcing all the warrants to be called. And in that situation, you really have no choice. Your two choices are to sell them, and you're going to sell them at a loss. So I already said that's out of the question. And your other choice is to exercise them. So if they do a cashless option, I already spoke about that. But if they don't do a cashless option, you're going to have to spend $11.50 per stock, per warrant in order to exercise them. And you're going to exercise them for a loss. Again, you're going to be paying, in this particular situation, $36.50 to get each of these shares when the market price currently is only $29.14. So what would I do? So like I said, I would probably average down first a little bit, and then I would exercise them. So let's walk through the scenario about exercising them. Okay, so first of all, we are in for 700 warrants at $25. So we're in this total for $17,500 that we have spent so far for these warrants. So the $25, we're going to have to spend $11.50 per warrant in order to expedite it. So that's going to be $36.50 for one share. So if we expedite it, we have our original $25 plus we have to spend another $11.50 if this is not a cashless situation. So then that would mean we will be spending $36.50 in order to get one share of Hyliion stock. So the total is going to be $8,050 in order to expedite all 700 shares. So that's 700 times 1150. That's how we get $8,050 in order to expedite all 700 warrants. So $8,050 plus our original $17,500 that we already spent. So we're in this total for $25,550 total. So if we expedite it, we're going to get 700 shares. So now we exchange all warrants into shares at our cost basis is going to be $36.50 per share. And that's if we did not average down. So again, that's how we're in this thing for $25,550. So now let's see how much the Hyliion stock is currently. So the current price for Hyliion stock at the close of this recording is $29.14 for HYLN for Hyliion stock. So if we had 700 shares at $29.14 is what we could buy it for right now, we would be spending $20,398. So the difference here is $5,152. So that is roughly 25% loss right now. So if we expedited it, we'd be down 25%. So if we were forced to exercise and we had to pay cash for it, and we didn't do a cashless option, and we didn't average our cost basis down, we just exercised it at our $25 cost basis, we would be down roughly 25%. So the question would be presented: how much do you believe in this company? Because if you exercise it, you're down 25%. Do you think, or in my situation, do I think that I'm going to make that 25% up? Will I make it up in a year, 2 years, 3 years? Who knows? Who knows what's going to happen with the stock? But I know what's going to happen with the company. In, I believe, 2021, they are going to have their Hypertruck ERX out, and I believe 2022 is when they're going to be like mass producing. Correct me if I'm wrong on the dates, but something like that. I think 2022 is they're going to have mass production, and they are already signing contracts, with their current hybrid solutions. So the company is growing. They're in a better cash position. They're publicly listed now. I think the company has a lot of room to grow. So this 25% is going to be nothing. In 1 year, 2 years, or maybe even less, I think we're going to make that 25% up really, really quick. So it's only $5,000. So, in my personal opinion, that's what I would do. I would exercise them. I'll be at 25% loss. I'll be down $5,000, and I would just hold on to it and wait, and maybe even average down the shares. If I had extra money, I would probably could even buy more shares. Right now, the shares are only $29.14. So that's an option as well, and you could average down your cost basis, and then just wait until the share price comes back up. Because personally, I think the company is strong. The company is going to start delivering, and their vehicles are going to be out on the road. They're testing a lot of vehicles now. So I think the situation is fine if you're willing to wait 1, maybe 2 years. To make up that 25%. So that's my opinion, guys. Hope you find some value in this video. Hope you appreciate my video, my time, and my content. I really appreciate you guys for watching my video and my content. So leave a comment in the description below. Check out my links in the description below. Have a nice week. Have a nice weekend. Catch you in the next one. Peace.